But Cyient is a stock that we're going to talk about. It's the first management of the show. It reported a soft Q4 numbers. The EBIT margins came in flat. The company's guidance of high single digit for FY25 appears to have disappointed the market. To discuss this and more, Krishna Bodanapu, the Executive Vice Chairman and Managing Director of Cyient, joins us now. Mr. Bodanapu, thank you for joining us. You know, this high single-digit growth guidance that you have given out, I think it's disappointed the street. Can you tell us, because, you know, your FY24 constant currency revenue growth was around 12.6%. That too missed your own guidance of 13 to 13.5%. Are we staring at another year, where perhaps you could see slower growth than the previous one? And what are the big trends looking like now?
So good morning, and thank you for having me on the show. Of course, the commentary that we give or the guidance that we give is based on the conditions that we see in the market. And I think based on the conditions that we see in the market, generally in the industries that we're in, calls for this prudence, right? I mean, we did grow 12.5% last year. Of course, there was some acquisition benefit also that was there in that number. But I think just looking at what the market looks like and just being prudent about it, I think this is the number that we have a line of sight to deliver. Let me be candid about that, to say that we have a line of sight to deliver this number, and therefore I think it's really what we are looking at for the year. I think talking about trends, I think there is still a bit of weakness in some sectors. For example, the communication sector has not fully recovered, and you'd see that in various results that have come out. The aerospace sector, we had 7 quarters of growth, but we had one flat quarter this quarter. But that's expected. We'll see some decent growth for next year there. But I think the big wild card for us is really how the communication sector will recover. Because having said that, there's again some good sectors where we're seeing growth. We have a sector that focuses on sustainability-related industries. That's doing very well. The automotive sector, though small for us, is doing very well. We're well positioned in the semiconductor sector. But I think there is still a bit of a challenge in the communication sector, which is about a third of our business. Taking all this into account, we think that this is a prudent target for us, and that's what we have a line of sight to, and therefore that's what we commented yesterday.
Got it. So you're saying that the communication sector is still not recovered. You also said that the conditions in the market call for prudence. Can you just elaborate a little more on that in terms of client spending? How is it now? Is it worse off than what we saw, say, 6 or 8 months ago? Are orders getting deferred, getting delayed? Any more details on that? You gave us a sectoral view, but any more qualitative views on, client spends, etc.?
I think in general, there is a bit of a delay in some of the spends. I think the good news is we're still, or we haven't seen any cancellations, or we haven't seen any sort of stoppage of an existing project or things like that. But again, like I said, it's a bit sectoral, so I won't get into the detail here. But I think in general, customers are cautious. Customers in the sectors that we operate in are a bit more cautious than they were, say, 6-8 months ago. They're still talking about, the technology deployment, the capabilities that we do well in, the projects that we can support. I think the conversations are going. I think maybe the enthusiasm or or their ability to cut POs is a bit deferred. Just looking at, there's just, I would say there wasn't mass uncertainty, if I may use that word, but there is definitely a bit of trepidation in certain sectors where people don't necessarily want to make the spend right now or the spend decision. But having said that, we're still seeing the conversations leading up to the spend decision, and we're quite confident that during the year, of course, assuming that macro remains more or less as it is, during the year we'll start the order flow again holding up quite nicely.
We were talking to the TCS CEO earlier, Krishna. Morning, Prashant here, and
Morning, Krishna.
We were talking about this dichotomy, right? The economy seems to be all the data points on which all the macro stuff that you spoke about. I mean, that's dependent. That's all looking good. And as you're saying, even for TCS, and you're also saying, there is people are sort of delaying in making those decisions, right? So I don't know if you want to address that dichotomy. If you do, please go ahead. But I also want you to address the DET margin. I mean, that guidance for FY25 is 16%. You had laid out aspiration to get to about 18 and 20% over the medium and long term. So what happens to that? Is that still on track?
So I think that's an interesting point you bring up, Prashant, in the dichotomy, and we're definitely seeing that. And I think some of the dichotomy is also because of the relative nature, right? If you look at how the economies were coming out of COVID, we were seeing a lot more spend because a lot more spend was a little bit of the pent-up spend or the delayed spend from, say, 2020-21 timeframe. So I think in that sense, you do in the broader technology sector, you do feel a bit of dichotomy from that perspective where, we were, last couple of years, of course, we were also cleaning up a lot of the spend that got delayed. But also, having said that, I'd say the good news still is I think there is a lot of technology evolution that is happening. And this technology evolution means that people will have to put in that money, that resource behind implementing the new capabilities, et cetera, to really, ride that technology wave. So in that sense, I think, 2020, late 22, 23, we saw some of the pent-up demand. Right now, there's just a bit more stability that is coming in. Most economies are doing reasonably well. Of course, in India is a different story, but of course, our client base is not very India-centric, and therefore the extraordinary growth that we're seeing in India doesn't necessarily translate to our business. But I think if we can grow in that high single digits, considering what we're seeing right now, it's a good situation just coming out of all said and done 1 or 2 good years, and therefore we can see a good trajectory going forward. And that also ties into the margin because our aspiration still remains to be in the 18 to 20, or not just aspiration, but I think we have a line of sight. But with that also comes as long as we have some good growth, because we'll have to continue to invest a little bit into making sure that the growth happens, be it around sales, be it around technology development. And that's a very important point because a lot of the growth is coming because of this evolution in technology. I mean, all of you have heard about generative AI and those kind of technologies, which also means that we're having to put the training and the effort behind to make sure that we're prepared for that. So that will remain as long as we come back a little bit into sort of the teens for the growth trajectory. And the second thing is once the shift, which is happening quite a bit, of the traditional mechanical data work moving into technology work, because then our investments into some of the things like training, et cetera, can actually come down a little bit. So that remains, but I think this is not the year for us to hold back on some of the investments that we will need, both from the go-to-market perspective, but also retraining and reskilling people.
All right, Krishna, Nigel on this side. Just a quick final question before we let you go. Transportation for you is aerospace, which has been doing well. And you have railway, actually, that's been degrowing. So I think it's been under some pressure. So could you tell us, out of this entire mix, how much is coming in from aero, how much is coming in from rail, and what has been the growth rates out there, and how do you see it shaping up?
So aero is the predominant part. It's about 80%. But in rail, like you said, we've been degrowing. We have some very specific customer issues, but also industry level issues. There's a significant consolidation that is going on in the rail sector. There's a lot of acquisitions that have happened. There's also a lot of divestitures because of the acquisitions, in the sense that anti-competitive laws in various countries are kicking in. So there's just a lot of churn in the rail sector right now. Having said that, our aerospace business this year grew 20% year on year compared to last year, obviously. So that's a great growth for a large part of that business, and we see that continuing into next year. While the fourth quarter was a bit tepid for the aerospace business, we're seeing that growth is coming back. We've won some really, really good deals that we talked about yesterday. Also, some new, not just renewals, but significant additions. I spoke about a deal with Airbus on the investor call yesterday, Deutsche Aircraft, which is a new customer, which we also made a press release around. And also we're segueing quite nicely into some of the emerging trends in aerospace, like urban air mobility, electric propulsion, and so on and so forth. So aerospace will continue. Rail is where we're still a bit wait and watch or cautious, because various things are still going on, and things have to settle.
All right, Krishna, I appreciate you stopping by, telling us about what went on in the past quarter and how do you see things shape up going ahead as well. We'll touch base with you all through this fiscal as well.